Hello, my name is Richard Wood. It's the 27th of October 2013. I'm going to quickly summarise the events of the global financial markets for the week just gone and take a look at the coming week ahead. The biggest news release of last week was probably that of US non-farm payroll figures for September. The market had been looking for 180,000 jobs to be added to payrolls. In the event, 148,000 jobs were added, so below market expectations. When you combine this news with the US government shutdown that took place during the first few weeks of September, the result is that market participants are adjusting their expectations and forecasts of when the Federal Reserve may start to taper its asset purchase scheme. People are looking to March 2014 as being the first date that the Fed could start to scale back its bond buying program. The consequence of this is that equity surged higher, bond yields were lower, the US dollar was weak, and gold put in a good performance which reflects that weakness in the US dollar. There were some negative data releases for the euro area. Euro area composite PMI figures were worse than expected, as were business confidence figures out of Germany. Despite this negative data, the euro actually put in a very good performance this week, again reflecting weakness in the US dollar. UK GDP growth figures were released on Thursday and showed that the UK economy grew by 0.8% in Q3. That's a nice positive reading. The effect on sterling was muted because the growth figure of 0.8% was widely anticipated by the market and already priced in. The commodity currencies, namely the Australian dollar, Kiwi dollar and Canadian dollar, were softer this week. There's a nervousness that the Chinese government might start to tighten policy, which would have negative consequences for those currencies that rely on strength in commodity prices. In terms of trades for last week, the end of day strategy, which I trade with real funds, I didn't actually take any positions, spoke last week about looking for long positions in equities and short positions in the US dollar, but didn't actually get any signals that I liked, so no trades taken. Did have an existing position long in the Australian dollar against the US dollar. The Australian dollar softened, as I just said, and that position hit its stop loss. Made a profit of around 2 times the amount I risked there, so a nice trade, although I had been looking for the Australian dollar to continue its strength against the US dollar. The weekly strategy I use, I don't trade that with real funds, so I won't talk about it in too much depth. Had a short euro position stopped out and 2 long positions in the euro moving into a nice profit, but those trades are still open, so let's not count our chickens too soon. In terms of trading ideas for the week ahead, the prevailing market trends continue to be weakness in the US dollar and strength in equities, so I'll be looking for long positions in the S&P 500, the FTSE 100, possibly the Dow Jones, and short positions in the US dollar. Looking at other ideas, when the market is widely expecting something to happen, sometimes completely the opposite happens. So people are looking for weakness in the US dollar. My slightly contrarian idea is to take a long position in the US dollar against the Japanese yen. If you look at the dollar yen, it's at the bottom of its trading range. We also saw the Nikkei down last week due to strength in the yen, and that's whilst other equity indices were moving higher. The Bank of Japan makes its interest rate decision on Thursday, so I'm just wondering if there might be some commentary surrounding that interest rate decision aimed at softening the yen. I'm not going to enter a trade right now, I'm just going to watch the market and see what happens. In terms of data releases, which I'll speak of in a little bit more depth in a second, it's quite a quiet week for the pound, but there is a lot of data being released for other countries. I'm just wondering if there could be an opportunity to be long the pound following the positive GDP figure from last week, in the event that there's a negative news release for another currency. So, for example, I don't know, you get worse figures out of the euro area, people might just start to look to move out of the euro and into the pound, anticipating that it could be a safer place to be this week. In terms of data releases this week, I'll just summarise the big events. There's quite a lot of news being released this week, so it could be a volatile trading week ahead. On Tuesday, we have advanced retail sales from the US and US consumer confidence figures. Wednesday, we've got another busy day in the US. We've got US CPI figures for September release, and the Fed will also make its decision on interest rates and its asset purchase scheme going forward, although as discussed earlier, not anticipating a change in the numbers there. We've got some figures out in the euro area, with Germany releasing its unemployment figures and also CPI figures. Thursday, as I just mentioned, the Bank of Japan makes its interest rate decision. We have Eurozone CPI being released and also Canadian GDP figures for August coming out. Friday, we've got Chinese manufacturing PMI, which will have a big bearing on the global economy as a whole, so that's a figure to watch closely. And we also finish off the week with US ISM manufacturing figures, so lots to watch out for this week. Thank you for listening to my market commentary. If you're trading this week, good luck.